It exempts them from paying IGST for 6 months. An e-wallet gateway will be developed and introduced by March next year for faster refund process.
It's a big push for small businesses. The threshold for filing GST returns is hiked to a turnover of 1 crore from the previous 75 lakh rupees. Small and medium enterprises with annual turnover of 1.5 crore rupees who had been complaining of compliance costs now need to file only quarterly returns and not mandatory monthly returns.
Railways Minister Piyush Goyal tears into Uday Kotak panel report on corporate governance reforms. Goyal says suggestions that only people with specialized knowledge must join the board of listed companies will be counterproductive. Also disagrees with the proposal that the power to appoint independent directors should vest with the board and not the promoters.
Former SEBI chief M. Damodaran says it's high time the role of chairman and MD and CEO are split in listed companies. On the recommendations of the Kotak panel that at least half of the board members should be independent, Damodaran also asserts what matters is the integrity and honesty of the directors more than the board composition.
Big morale booster for the Modi government as the World Bank gives a thumbs up to GST at a time when the BJP government is facing attacks from both the opposition parties and a few veteran leaders of its own party. The global funding institution says the GST switch will give a big boost to the economy in the longer run. Also says gains will start flowing in the current financial year itself.
Supreme Court raises concerns about the mode of execution of capital punishment, hearing a plea against hanging of death convicts. The bench headed by Chief Justice Deepak Mishra sends a notice to the centre asking the government to file its reply within 3 weeks on the Law Commission's report against the execution of death warrant by hanging.
China keeps the Doklam fire alive. Reports suggest that a sizable chunk of Chinese forces are still camping near the area and are even involved in widening the road leading to the disputed area. Air Chief Marshal B.S. Dhanua acknowledges Chinese build-up in the area, even as the Congress Vice President Rahul Gandhi slams the government for poor handling of the situation.
In a major embarrassment for the Indian Air Force, the heavily relied upon Mi-17 V5 chopper crashes in Arunachal Pradesh from an altitude of just 17,000 feet, killing all 7 on board during an air maintenance mission. The Indian Army sets up a court of inquiry to establish the cause of crash.
Those were the headlines at 9 p.m. and now on to the India development debate. 3 months after the GST launch, sweeping changes have now been made to this ambitious tax move. The government has moved quickly to reduce compliance costs for medium and small businesses by first increasing the threshold for GST compliance for business with 75 lakhs in turnover to 1 crore now. The GST Council has also eased the procedural burden of SMEs, allowing them to file only quarterly returns. In fact, exporters will be refunded credit by 10th of this month. They've been exempted from IGST for the next 6 months, and e-wallets will be set up by April to enable advance refunds.
Indeed, the government has also set up a group of ministers to look into rate reduction of certain specific categories like the restaurants. So will these changes now ensure more compliance and help boost the paltry returns so far from the GST? How soon before rates are rationalized and commodities like petrol are brought under the GST ambit? Is this a minor tweak to smoothen the GST rollout, or is this a big reboot? Given the sweeping changes, did the government, and that's the final question, rush into rolling out the GST? The big GST reboot relaunch is a big debate on the India development debate. I'm Supriya Srinath in New Delhi, and joining me in Mumbai is my colleague Sandeep Gurumurthy. We've got an extremely eminent panel of guests right here on ET Now this evening. Arvind Virmani, President Chintan Live. We've got Uday Pimprekar, tax partner EY India. Ganesh Kumar Gupta, President Federation of Indian Export Organizations, of FEW as it's called. Mukesh Bhutani, Managing Partner, BMR Legal. Thank you each one of us, and of course our consulting editor Maithili Busnurmat, who continues to be with us on this big story. Thanks each one of you for being with us. And Mr. Virmani, if I may begin to talk to you about the changes that have been recommended. Relief for SMEs, the threshold limit being increased, export relief, reduction in rate for categories across the spectrum. Is this a big reboot of the GST that was launched 3 months back, or is this a tweak according to you?
I think it's a start, and let me put that into perspective. You know, many people were saying, don't make any rate changes, don't make any major changes. It will create uncertainty. What I had said was that the way the system has been set up is creating uncertainty. So you have to make changes which will reduce the uncertainty. That's one point. The second point is that I'm happy that the GST Council, hello, can you hear me?
Yes, please go ahead, Dr. Virmani. Please go ahead.
Yeah. Okay, sorry. The second point I made was that GST Council had given the impression that it was very hidebound and concerned only with the revenues that they could collect, each state, states collectively, the center. And I think what this shows is that they have heard the people. Now that we have explicit actual experience, they have realized that there are changes which have to be made and must be made within the first year. There is no point saying we will make no changes in the first year. So that's very welcome, and I am glad of it. And the third point, which I think the finance minister emphasized and which will form the basis, is that 90% of the filers pay roughly 10% of the tax. The compliance burden on these, which are basically the tiny, small, and to some extent the middle people, you have to reduce the compliance burden. So that principle has been accepted, and hopefully over the next 6 months or so that will be implemented. One final small point, we can discuss that further. A point which I made 6 months ago or so in a blog was that the uniform rate is most important for intermediate goods. I think they made a start in implementing that, but they've also gone the other way, which is not a good augury.
Okay, we will talk about that specifically, and before we get down to the specifics of what they have done to reduce compliance cost for SMEs and the boost that they've given to exporters, let's just get the big picture right first. So I'm coming to you, Mukesh Bhutani. Do you agree with Dr. Virmani on the fact that this is a beginning well made, but or would you go to the extent of saying that this is a massive reboot, a massive reset that has happened to the goods and services tax that could sort of set the stage for this reform from here on?
I don't think this is a big reboot. I think this was expected. I largely echo Dr. Virmani's sentiments. I think we knew that India is not going to have a perfect GST. There would be a steep learning curve, not just for the policy makers but even for the taxpayers. I just want to make one supplementary point, which is that part of it is driven by glitches that were evident as soon as we got onto the implementation mode, and part of it is, in my view, also driven by the fact that there is an element of caution as a result of the growth figures that have come for first quarter, which most economists are attributing it to the implementation of GST. And I'm not a trained economist to comment on this, but I would imagine that if there are several lakhs of small and medium taxpayers who ought to be GST compliant and who are not on the GST portal, a substantial amount of data, or rather a whole of the data for those category of taxpayers was not visible, which is kind of getting reflected in the GDP figures partly, though we had the GDP figures only till June, but and the GST was implemented from July onwards. Having said that, I think this is very timely, because now this will encourage a combination of a reduction in compliance requirement and the composition scheme, and the raising of the limit for the composition scheme, in my view, is going to help bring several lakhs of taxpayers into the category of being GST compliant and being on the GST portal, and hopefully this data will get reflected in the third quarter, if not in the second quarter. So I think a combination of the composition scheme and the ease of compliance is, in my view, a positive mode, and I think that this is just the beginning. Don't be surprised if we learn as we go ahead, and there are more changes that will come up by way of administrative circulars or by way of important policy decisions that the GST Council will be making.
Okay. Fair point indeed. Those are important points that you're talking about. I'll go to composition scheme in just a bit because there's just so much to discuss there. But Uday Pimprikar, if I may ask you, how big a relief is the 1.5 crore turnover for SMEs that can now file quarterly returns? You know, there was a mandatory monthly filing, and most SMEs, at least on the EY 18-hour poll, said that the cost of compliance and the procedural burden was way too much. It was almost weighing upon them. How big a relief is this according to you? That they will only be quarterly returns and not mandatory monthly ones?
So I think this relaxation is, I think, generally welcome. Okay, but one would need to think about the commercial realities that when we are talking about this. GST as a law and the way it's been implemented, it's actually fairly linked through the chain. And what it really means is that MSMEs who can file a quarterly return do opt to go ahead and file quarterly return, and that obviously is a superior rationalization. There's no doubt about it. But it will also weigh upon the people that they deal with. The people that they deal with would be, if they are large companies, would get credits at the end of the third month. And how would commercial negotiations happen on account of this? How would people react to dealing with these companies would be interesting to see. I think some amount of leeway could be given to the large companies to allow slightly faster credits, or an option given to these guys to at least file part filing, so that there is no deferment of credits for their customers. Okay. Some of that would need to be kind of thought through a little bit more, but it's a welcome move. It's a start. It's a great, and it should be some amount of relief to small companies. Mm-hmm.
Maitri, you know, in terms of the impact on the economy as a whole, because there's a lot of research coming in on the fact that this one move alone choked the supply chain as far as a lot of the SMEs are concerned, and that in turn had a massive impact on on the economy as a whole, because from the manufacturer to the wholesaler to the retailer, everyone was sort of clamping down in some ways. The manufacturer was being forced to produce less because the wholesaler was taking less products, and the retailer in turn because of the fact that this whole mechanism was a little stretched. So will this fix that, do you think? Is it adequate to fix that problem? Will it sort of breathe fresh life into the supply chain, which was disrupted?
I don't think that the
well, I'm not sure it will address the issue entirely, but yeah, I'm not sure that it will address the issue entirely, but given the fact that it does iron out many of the wrinkles that did exist in the GST scheme as was implemented in India, because let's not also forget that given the compulsions of the political economy, the GST scheme that we are implementing in this country, the regime, is not the best. It is a fairly flawed kind of GST regime, but it was the best that could be done in the circumstances. And now that we've ironed out many of the wrinkles, particularly as far as two crucial sectors are concerned, SMEs as well as exporters, to that extent I think it should make a substantial difference, because SMEs contribute to well over 50% of the country's GDP, and their share in exports is even higher. So to that extent that the main concerns of these two sectors have been addressed, it should substantially help bump up the GDP number. Also, remember, these are the two sectors that also contribute largely to employment. So I think two major concerns, the slowdown in GDP growth and the fact that there were so few jobs being created in the economy, I think these two concerns should get addressed at least partially, if not entirely. And as long as Dr. Arvind Virmani has said, the GST Council shows flexibility, then we can hope that as we continue down this learning curve, whatever glitches arise in the process, those will be ironed out, and that is definitely a happy augury.
Fair point indeed. Maitri, I'm going to come to you in just a bit, and we will obviously take up exports in far more detail. But Mr. Gupta, even though you represent the exporting community, I'm also going to ask you this question because there's so many SMEs that make a part of these exports. There was a solution that was put on the table that instead of matching every voucher, why isn't there a more frequent random audit? And instead, invoice matching should be done only for IGST. Isn't that a solution that would have perhaps eased the compliance burden even more, made the procedural burden even less? Even though it wasn't discussed at the GST Council meet, it didn't quite find favor, but that's a plausible solution that could have eased things.
See, these things has to be seen in fine tuning. When the notification comes, then we will know exactly what has happened. But I am really happy that whatever we have proposed to the GST Council, and last meeting with the Finance Minister in the month of September on 24th, whatever we have proposed, I am happy that today all these things has been accepted by the government, especially refund of the July and August, which will be on 10th and 18th of October will be given to the exporters, so that I believe that the Diwali will be very great for our exporters. Then we have proposed to the government about e-wallet, which government has accepted it, and it will be implemented from 1st of April next year. In the meantime, interim period, all imports related to export on advanced license, EPCG or EOUs, that all will be exempted. That will be a great relief to the exporters. Then regarding merchant exporters, the interim period, they have to pay only 0.1% GST, and from 1st of April, whatever our proposal was for GST to bring out a e-wallet, that has been accepted, which is going to be a great relief to the exporter. And these are the most important issues we were addressing to the government, and we are really happy exporters will celebrate this Diwali with a lot of joy and happiness.
Okay, exporters are a happy lot. We'll probably come to each of those measures and talk about them in a granular detail. But Dr. Virmani, I'm coming to you to understand the big picture as far as SMEs are concerned, and on how much the compliance burden has been eased. You spoke about the fact that 90% of these are small and medium enterprises. Do you believe enough has been done to reduce the compliance burden? There's one specific point that we spoke about, quarterly filing of returns for people up to 1.5 crores. The point the Supreme was asking, could they have gone the full distance? Why not move to this, get away from this business of invoice matching for B2B transactions, because that many believe was breaking the supply chain. Could they have just said that do this invoice matching only for IGST and do it away? Otherwise, would that have cut procedural delays? Would they have helped reduce compliance costs further? Or do you believe enough has been done as far as reducing compliance costs for SMEs are concerned?
So the gentleman who mentioned this matching between monthly and quarterly, I just want to clarify. I think among the SMEs, there is also traders and there are service providers. I don't know the proportion, but a large proportion of these are final goods and service providers. So they will not be the problem, which he correctly raises. Only applies to intermediate goods suppliers who are supplying to large companies, who will still be filing monthly returns, and then the matching can only occur in the quarter. But as I said, according to the figures given by the Finance Minister, that will only constitute less than 5, he said total 10%. So much of that may be final sale. Out of that, only the part, I don't know, 2 or 5%, which is going from the small scale sector to the large, there could be a little bit of a problem. But I think it's now manageable and small enough so that the government could have some simple rules that you can collect it after a month or something, so it's not an insurmountable problem. That's one. The second part is that I would urge the GST Council that they should be even more flexible. If it's necessary to bring more people into voluntary compliance instead of thinking that you have to use the danda for everything, I would even urge them to consider 6 monthly for the very small traders, 6 monthly returns for the very tiny and small trade services, etc. Again, purely on a voluntary basis. We have this composition scheme, and that taken with the monthly thing is a great relief. But I would urge them to think even more broadly in an integrated way about this 90% which they are saying only provide 5 to 10% thing, and I think it can be simplified even further so that people will feel happy to join, given this new atmosphere that everybody has to pay taxes, etc.
Okay, fair point indeed. But Mr. Bhutani, if I may come to you, and I think the finance minister did elaborate that almost 95% of the returns that are coming on the GST are coming from big businesses, and the rest of it is coming from small businesses who have complained of compliance cost, and which is why the composition scheme has been relaxed from 75 lakh to a crore. That's the threshold really. How many businesses stand to gain from that, and is this really a big breather?
I think the challenge that many of the small enterprises were having was not really to do with the compliances that they have to do, but it was to do with the degree of literacy on IT. So let me give you an example of a blanket trader in Amritsar that I met 3 weeks back, and I just asked him a casual question to find out how is he coping up with this new law. I don't know how much money he makes, but he would be selling blankets worth 10 to 15 lakhs a month, and I'm just taking a very wide guess. And he said, Saab, I don't even have a computer, a laptop. So where is the question of me complying with it? I have actually have to, for the first time in my life, engage with an advisor, not because he's going to advise me on how GST law is going to work, because I understand how the GST law is going to work, but actually how to get online with the system. The reason I'm giving this example is that in my view, this is a significant challenge that many of the small enterprises would be facing. Now, part of it would get addressed by over a period of time when they see themselves IT illiterate, but not being able to comply with a very important law because they want to comply with the law. And part of it, I think the government as a part of the taxpayer services through the facilitation cells that they have been set up can impart a degree of education. But I think if you go to B towns and C towns, it's a real challenge of sorts. Now, it could be anybody's guess whether this would be addressed over the next quarters, or it could take even a year or so. I would imagine that to some extent the government can assuage the sentiments of many of the small enterprises by giving them the comfort that technical breaches will not attract penalty. Now, bear in mind that purely from a policy standpoint, once a statement of this nature is made, you would have quite a few people who would take advantage of that kind of an amnesty, running away from interest and penalties. But I think that in an unusual situation that we are presently dealing with, where the government is struggling to bring more and more small taxpayers into the GST net or into the IT network or the GSTN network of the government, I think a statement, policy statement of this nature will certainly send down a greater degree of confidence, because what the numbers reveal and what the numbers you spoke about are not really the numbers that give a confidence that all the SMEs or a substantial part of the SMEs are still on the GST portal.
Fair enough. Okay, we've addressed SMEs in great detail, and viewers, a little later in the show, we'll try and explain to you why all this is so significant. Why is this so significant for India's development? In this show that we're debating, India development debate, it'll all come together. So bear with us. We don't want to get too technical here. Uday Pimprikar, I'm coming to you on exporters, because the two clear pain points. The agenda of this meeting was very clear. Fix the pain of small and medium enterprises, fix the pain of exporters. On exporters, very immediate, like we can see, the representative from FIO is visibly happy. Immediate refund to be done for exporters starting the 10th of October, if I'm not wrong. Will this early refund really help them, because they were in the midst of a liquidity crisis? How big a relief is also the exemption from paying integrated GST for the next 6 months? So put together, is this a good enough package for exporters?
Of course, we will need to see the fine print, and I think, but from whatever has been said, I think a large part of the pain point at least has been attempted to be addressed. There were two issues, two broad basket of issues that the exporters were dealing with. One was that in the pre-GST era, procurements were at a much lower and a much better tax regime and a much better, lower tax rate and far lesser costlier therefore, okay, in relation to the export on account of specific exemptions, non-taxability of procurements, okay, both on the VAT side and also on the central taxes side. There were avenues where you could procure items without payment of any tax and so on and so forth. Right. GST, when GST was implemented, suddenly a lot of it just stopped, and the intention was possibly right that everybody pays tax and the exporter would then get a refund, and the refunds would be granted fairly quickly, and therefore the pain that an exporter feels on account of higher working capital would not be felt as much. But that entire chain quickly broke because the mechanism for granting refunds was not really in place. So the first thing that has happened is they have said that, okay, whatever whatever exports have happened and whatever is the working capital or refunds to be granted for the past couple of months of exports will now be granted quickly by starting October 10 and October 18. Again, how fast it is implemented is equally important, but it's a great start and a great intent shown. The second bit of changes that have happened is basically to get back to a regime which was there in the pre-GST era on two counts again. One, that whatever procurements are being done under an advance license, advance authorization, EPCG, those schemes where an exporter could procure inputs and capital goods sans duties will now be able to continue to do so. Okay, so he's on the central government side. As also on procurements for merchant exporters and merchant exporters would be charged at 0.1% from a supplier side, so that the supplier is not this supply is not treated as an export, as an exempt supply, and credits are not lost. And so both these broad schemes that are being suggested are great schemes, and I think the export communities should be decently happy with what they have been kind of dealt with right now. I think the intent is clear that they want to kind of address, and they have by and large tried to address. Sure. The rest of the schemes as to how the e-wallet will work and how the nuances will work out, again we'll need to see. But again, great suggestions, great implementation. Implementation is now the key.
Right. You know, you say exporters should be happy. I think Mr. Gupta is already saying it's going to be a good Diwali as far as the exporting community is concerned. But because we're talking about specifically issues relating to exporters there, Mr. Gupta, you know, the immediate relief is, of course, refunds for July will happen by the 10th of October through checks, and refunds for August will happen by the 18th of October via checks. But the whole e-wallet issue that has been spoken about, by April of 2018, the government is looking at an e-wallet where advance refunds can be put that can be offset against actual refunds. How big how big a relief is that going to be? Because some of the other finance ministers who walked out from the states did say that direct subsidy is as much on the table as a e-wallet really is. What would the exporters at this stage prefer?
See, this e-wallet scheme is a welcome move, because again we will be back to the same H-form era. It is not in the name of H-form, but e-wallet, where the debit and credit will take place. Physical money will not go from the working capital. So this is what the exporters were demanding, and today Honorable Finance Minister has announced this. This is going to be a very, very big relief for the exporters, and for the interim period before this is implemented from 1st of April, for this 6 months, there will be exemption for the interim period for the export related imports under advanced authorization scheme or EPCG or EOUs. So there won't be any financial involvement or any capital involvement. Then regarding merchant exporters, since they cannot exempt it, they have put it 0.1%, which is mere nothing for the interim period. So this e-wallet scheme, which we were demanding before the rollout of GST we were demanding for last 1 year. This has been accepted today. So this is a very, very good move for the export fraternity. Thank you.
Right. You know, for our viewers who are wondering what this e-wallet is all about, just to try and simplify it, it's essentially a notional amount which should be given as advance refund to exporters, and that will be offset against the actual refund. Of course, this is going to kick in only in 2018, March of 2018. Maithili, help our viewers understand the big picture of what's happened in exports. You know, Uday here explained what the problem was and what the solution that the government has come up with, and we've got Mr. Gupta talking about how it's going to impact exporters. But from a broader economy point of view, again, why is this significant? Why was it important for the government to have fixed the pain of exporters?
It was very important, Sandeep, simply because Indian exports had been faring very badly over the past 2 or 3 years. In fact, it's only since August last year that they started picking up. But even so, our exports were growing much more slowly than our competitor countries for a number of reasons. First, global growth was very slow and hence demand was suffering. At the same time, the rupee was appreciating. As a result, we were losing export competitiveness. It's never been easy to do business in India. So on that reason also, Indian exports always had an inherent disadvantage. Added to that, we had all these problems with the introduction of the GST, as Mr. Gupta has explained. There is a huge pile-up of refunds, an increase in working capital cost. As a result of all this, exporters were suffering not just once or twice, but thrice, 4 times over. And we saw all this coming up in the trade balance, where export growth fell, import growth hugely increased, as a result of which the trade balance in the current account for the country shot up to 2.4% in the last quarter. Now, this would definitely increase our external vulnerability. So, it is very important that the government do whatever it could to ease the pain of exporters, and this was one really fairly easy way of easing the pain, at least as far as GST is concerned, because global growth is something that the government cannot control. Global recovery is happening, but it's still nowhere near where it was before the crisis level. The rupee appreciation, there's a limit to how much the RBI can intervene, so there's not much, very much. They could do more perhaps, but not very much. So GST is something that the government could have done something to ease the pain of the exporters. So it is very good that they have intervened, and to that extent, hopefully export growth will pick up, and the vulnerability that we are slowly seeing on the external front will also come down.
Okay. Dr. Virmani, if I may ask you on exports specifically, I do understand what Maithili is saying, that, you know, this was welcome because our peers are perhaps growing at a faster export rate, and if growth has to really pick up, and especially because exports is so job intensive, you've got to give it that push, and which is perhaps why the government has done that. But, you know, if you put it all together, does this kickstart Indian exports? I mean, I know Indian exports are down to levels of 2% growth from the historical 25% growth, but will this get the ball rolling, as they say, as far as exports are concerned?
See, exporters I have talked to were expecting a collapse in exports actually. But let me just tell you about VAT. You know, world over, the VAT has been sold as a way of simplifying domestic taxation of imports and of taking export taxes out of the exporters. Here, for some strange reason which I still do not understand, but it does not matter now that they have sorted it out, we did the opposite very strangely. We used the GST actually to increase the component of taxes implicitly into exporters, which was the oddest thing to do, frankly. But good that they have recognized this. And if I've understood Mr. Gupta, I think the export leader, that they have actually resolved this pretty well using this so-called e-wallet. The important thing is to resolve it and get back to what is a real VAT system for exports and imports. So that is great, and it will certainly improve the export performance above what it would have been if nothing had been done. But of course, there are two other important measures which Maithili has clearly mentioned. A slight variation on what she is saying on the real effective exchange rate. I am just in the process of doing some work, and what we find is that the real effective exchange rate does not have a negative effect on all exports, but it seems to affect more the labor intensive and more standardized products. Even if the effect of a RER appreciation is to increase, which is very counterintuitive, I won't go into the technical details of the overall value of exports, it has the opposite and negative effect on labor intensive. So, certainly from the point of view of employment, jobs, etc., which we keep talking about, right. This exchange rate is very important.
Let me take this across to Mukesh Bhutani, and I think let's talk about bread and butter businesses that will be impacted, and it will be impacted for people like you and me, Mukesh. The rates that have been brought down, I mean, consistently for about a variety of products, from dried mango to khakra and things like that. So, of course, what do you make of this rate reduction? But I think the larger question also, I think somebody from outside the GST Council said, the idea is convergence of rates at 18%. The government also did bring down, the work contract for government. Those rates have been brought down to 5%. It's obvious repercussions on infrastructure investments and things like that. But what is your reading of rate reduction? Is this along expected lines?
Well, my only reading of rate reduction is that most of the products that have been picked up are the ones that impact the common man. And this form of tinkering, though purely from a tax policy standpoint, which is achieving convergence of rates, is not a healthy sign. But having said that, I think in the reactive mind that the government is in, trying to address the issue of inflation, it's trying to address a situation where GST should not now be a factor responsible for inflation and causing hardship to the common man. I mean, I can't read anything more than that, than the tinkering that has been carried out. You will see this form of tinkering being carried out on a consistent basis, and that, though that goes against the grain of the convergence philosophy that you're trying to achieve. But I think I don't see any other option that the government has but to be able to react on the situation that it finds itself into.
Right. Uday, comment on that, the broader picture, without getting into the specifics of what rates have come down, because that's sort of, too much of minutiae. But at a broader level, we heard one of the members of GST Council tell us that, the idea is to move towards 18%. Do you see that realistically happening? Do you believe that the Council, given the sort of legacy decisions it has taken, will move towards converging more rates, will move towards fewer slabs? Currently we have, 7-8 slabs. Will it move towards fewer rates? Will it consolidate more products in that 18% category until and unless it's established that GST in its current form is revenue neutral? Will it do it without having that conviction on revenue neutrality of GST?
I think in the longer run, I think everybody's convinced that that's the way to go. And I think the intent is clearly there. But will it happen in a jiffy? Will it happen in a rush? I would be surprised. And the reason is really that the revenues are not really buoyant. And I think these are extremely early days to take those calls, to be honest. The total, the quantum of revenue that has been collected in the last couple of months are, while they give slightly more clarity than what we might have had earlier. But I think they would need to look at for at least the next 2 or 3 quarters where the revenues are going to before making any courageous move to suddenly collapsing the rates. Whether they should have started with these many rates is anyway debatable, and there are arguments all over out there. But I'm actually not really optimistic that these rates are going to get collapsed quickly. Even if it happens, I think it will happen either earliest is early next year, which is at least 2 or 3 quarters from now.
Okay, we'll come to You will come to real estate and petroleum being a part of this in just a bit while talking about rates. But I'm interested to actually go to a topic that Sandeep mentioned before we took that break, and that's setting up of the group of ministers within the council. And Dr. Vermani wanted to come in on that. You know, this was a very UPA thing to do. When decisions couldn't be arrived at, set up a GOM. You know, it pushes decisions, it shows inactivity, it shows incapability to take decisions. We didn't think this government would do so, but it looks like, you know, mounting under pressure from states, a GOM has been set to now look at rate cuts, especially in areas like restaurant. How do you read that? How does that augur?
So very quickly on the rates, because it's related to that. You know, there are three issues here. If the revenue neutral rate is between 15 and 18%, is generally a bad idea to reduce anything below 15 further down. That's a bad move. It will make it more difficult to get to the neutral rate. Number two, you know, if there is a single item, whatever it is, whether it's a service like a restaurant service or a good, where they put multiple rates, I think there's no harm in the transition of integrating these. So some of these are going in that direction, those rates, some are going in the opposite direction. I would support the former but oppose the latter. And the third rate tinkering is on, as I had mentioned earlier, but on intermediate goods which were put at 28%. That is bad, that is wrong. If that is being reduced to 18, I think it's good. If it is moving away from 18, it's bad. So you, but as I think Mukesh said, or even Mr. Uday, that, you know, but this tinkering was there inherent in the way the GST operated, and that's where the GOM comes in. There were all these diverse interests which were asking for different rates on different things, maintaining all this complexity, and so I think the GOM will have representative. Instead of having 30 people pulling in every different direction, they would maybe have 3 special interest groups, so to say. I think if an effort is made, this GOM with reduced number of people arguing may actually help move us in a direction of simplification of rates, if it takes up that as one of its responsibilities.
Okay, so you don't think it's such a bad idea at all. You believe it could actually help get to the right decision. That's the view from Dr. Virmani. Maithili, you know, the other contentious issues, of course, bringing petrol under the GST net, real estate as well, but petrol more importantly right now, given the whole clamor over taxation of petroleum products. Given what you heard today, do you get a feeling that that they're moving in the direction? You know, we've had everyone say that this needs to be done. The petroleum minister, you know, has been saying that petroleum needs to be brought on the tax net. Rahul Gandhi has tweeted today that petrol needs to be brought under the GST net. So politically, everyone's saying the right things. When are they going to get down to actually moving on that front?
Well, walking the talk has always been difficult, particularly in a poor democracy. But as the finance minister very clearly said, petrol is not on the agenda right now. They do intend to bring it in, but not at the moment. I think the GST Council has enough on its plate. So as long as they handle even the problems that are now being presented, I think that would be a far enough move. I think petrol, real estate, alcohol, these are all things that will come in only much later. And I just want to revert to the question on the GOM also, Sandeep, because I think the UPA government's GOM used to be all union ministers. There were a group of ministers, union ministers, whereas the GOM that is we're talking about now will have representatives from the state, because this is a federal subject, because GST is a tax that applies to both centre and the states, and both are equal partners. So I think this is not the kind of the GOM that the UPA had. It's a very different kind and the right kind, and as Dr. Virmani mentioned, it's very much more difficult to manage with so many empowered members of the GST Council. It's a much larger, diverse group. So if you have a smaller, more focused group, that might get results much faster. So I think it's a good idea.
Okay, why is the council meeting if they have to keep forming GOMs? But yeah, I guess you have a point there. This is a federal structure. It's got federal compulsions and perhaps smaller groups, smaller focus areas. Mukesh Bhutani, let me ask you on stuff that has been done, and you said this wasn't the perfect GST to start with. This was along expected lines. You expected these tinkerings to happen. But what is it that did not happen that you would have liked the 22nd council meeting to do? They meet only next on the 10th of November in Guwahati. But what is it that you would have liked the council to do and did not happen?
Well, Well, I think that the council obviously is a closed door meeting where they take these important decisions. But I think what will be important for the council is also to do a update and a debrief as to where they are on the GSTN portal, how many taxpayers, potential taxpayers they see are still not onboarded on the GST portal. I think this kind of information would be extremely useful. I just wanted to go back to the point earlier on petroleum products. I'm optimistic. So yes, at this point in time, the government may be firefighting and addressing a bundle of issues got to do with growth, got to do with SME sector, exports. But to me, it seems that the onboarding of petroleum products and bringing it down, bringing it into the GST chain would, in my view, happen sooner than later. I think the difficult one is the alcoholic beverages. But I think as far as the petroleum products is concerned, we need to bear in mind that historically we have seen many states with high local levies and tariffs on the petroleum products. So it's not easy for many of those states to give away. I think there would be a sense of another bargain that would be undertaken with the states as a part of the GST Council to be able to bring the petroleum products on board.
Okay, fair enough. Quick closing comments. We've just got about 2-3 minutes. And Mr. Gupta, I'm coming to you. The key to success of GST, of course, is higher compliance and, of course, greater tax collections as well. August, July, we saw about 90,000 crores of collections. What's your own sense? With these changes made both for exporters and for SMEs, will this lead to better collections? More importantly, will this lead to greater compliance?
See, so far the exports are concerned, these all changes what has happened today, it will bring cheerness to the exporters, and there will be a better compliance, there will be a faster refund, and definitely what I see that the exporters, those who are not prepared to take the new orders in the month of October, now the new orders from the foreign countries will start flowing in. Exporters will be started taking the orders, and my projection of the export of this financial year will definitely meet what I have projected, about $325 billion and $175 billion service sector. I think we will reach to that, and very timely help what the exporters has received from the Honorable Finance Minister.
Okay, I'll get Dr. Virmani to have the last word on the show, sir. And there are two ways to look at what has happened today. One way is that the government is keeping its ears and eyes extremely close to the ground and is reacting and is receptive to complaints and issues that are being brought up. The other way to look at it is that has the government rushed into the GST and these nitty-gritties weren't really thought of or taken care of. How are you going to read this situation?
See, there are two components of the complexity of the system. One is the bureaucratic. I think the GST Council has so far focused really only on the bureaucratic part, which is obvious, which is easy for everybody to understand. The more difficult part is they don't understand, which people who have worked on GST, on the VAT principle on which it is based, have seen all across the world, is that simplification of the rates will actually increase revenues over, let's say, a 1 and more year period. Once they understand this thing, the GST can be drastically modified without affecting revenues or equity. You see, this is the thing, that a simple system can be equitable. But anyway, so that part remains, and till they do that, the full promise of the GST will not be met. I think we will get better compliance from smaller people, there will be less complaints, but the big promise of productivity and growth of 1 to 2%, etc., which is very feasible, will not happen unless they start focusing on simplifying the rate structure.
All right, the key is to simplify the rate structure. Today is a beginning well made. A lot more needs to be done. That's the clear consensus view of our entire panel. Of course, Mr. Gupta is jubilant with all that's been done for exporters, but our other experts believe a lot more needs to be done, even as everyone welcomes what's happened today. Thank you so much, Dr. Virmani, Uday Pimprikar, Maithili, Mr. Gupta, Mukesh Bhutani, for joining us with that perspective on the GST reboot right here on the India Development Debate.
On that note, completely out of time on this edition of the show. Thanks very much for tuning in. Up next is Top 10 at 10.